Wow, I hope you enjoyed that video. I guess Fidelity didn't like me blasting that metal music to clients before I walked on stage. So a little bit embarrassing, but see myself on stage. The camera does add 5 pounds. Please remember that.
Sure.
Welcome. My name is Hugo. I'm a contrarian investor. Thanks for being here. Thanks for staying. At this point, I'm between you and the lunch buffet. I'm standing between you and that first sip of afternoon margarita. If you're at home, maybe I'm standing between you and an early start to the weekend, so I appreciate it. Fidelity gives me these really tough spots. So as a closer, not sure why. I think partly because I'm more optimistic than Dan, and we want to finish on a good note. So here I am. I appreciate you being there. As usual, I prepared a little something. Hopefully you find it interesting. Simplistically, there's 2 ways to make money in the stock market. The future will be different than the past. The future will be like the past. And let me give you some examples. The future will be different than the past. NVIDIA 3 years ago. Brand new opportunity to really grow revenues. Nuclear stocks 3 years ago, right? Fukushima, things are tough. Nobody wants to do nuclear anymore. Germany, Japan, everybody's decommissioning nuclear. And then there's the Ukrainian invasion. The world changes. We need power. Then eventually there was AI, and the world changes for nuclear. Sometimes the future is like the past. 3 years ago, Netflix had negative subscriber growth for 2 quarters, 3.5 years ago. Stock goes way down, people are concerned. There's the Squid Game hangover, there's COVID hangover, and now things are back to normal, huge stock. Meta 3 years ago, things were really difficult. TikTok's gonna kill them. Advertising is in a downturn. They're spending way too much on the metaverse. Nobody wants to see themselves in flying torsos in the metaverse. They're spending all their cash. And then things normalized. It was a huge stock. Stock was up 8-fold. Today, I want to tell you that I'm betting on, I think the future will look a little bit more like the past. And we're gonna go back a decade. And I'm gonna put myself a little bit out there, so please don't judge me too much. But I'm quite bullish on Canada. And I'm bullish on what we call bad businesses. I'm bullish on commodities. I'm bullish on metal. I'm bullish on railroads. I'm bullish on mining equipment companies. I'm bullish on derivative companies, meaning drillers, companies that help mining equipment. And I don't think we talk enough about it. I'm the only portfolio manager over the last 2 days that has a Canadian-focused fund and Canadian opportunities. We have a lot of good Canadian portfolio managers. Max Lemieux, we have the Discipline Equity Fund by the analysts, we have Ritu, we have Don, we have Darren. But we've been very US-centric, and why not? That's what has worked the last 10 years until this year. So from January 1st, 2005 to January 1st, 2025, the S&P 500 beat the TSX by 4.5% a year. And that over 10 years is a big number. So that's the equivalent of 240% return for the S&P 500 total, 130 for the TSX. It's 110%, like a doubling of your capital, initial capital difference. This year, Canada's starting to outperform. And I think there's something happening there. And I think it's important that we pay attention to the signal that the market's sending us. And basically, I think Fidelity Canada, we've done a good job the previous 10 years, and I'm talking about the Canadian PMs. We've done a good job buying great companies, good companies. And what we've noticed is their multiples have risen and risen and risen. They've got more and more and more expensive. The Canadian good stories went from 20 times earnings to 25 times earnings, to 30 times earnings, to 40 times earnings. The US good stories went from 30 times earnings to 40 times earnings to 60 times earnings. Costco went to 60 times earnings. Howmet went to 70 times earnings. And I think now what's cheap is the old economy stocks. They're certainly cheaper on a relative basis. Now, Dan wants you to believe that the cheap stocks are like BC and Boo stocks. I say life's too short. Let's do something different, more interesting. I think old economy stocks are more interesting. We have to retrain a whole almost generation of analysts. Right? We have analysts that only know a couple of things. US always outperform, growth always outperform, and it doesn't matter what you pay for a stock, multiples always expand. And now when you look at relative value, I think a lot of it is into older economy things that Canada does. So, we're looking at, say, free cash flow yield on some of the miners, and at $4,000 gold, they're almost 20%. $5,000 gold, they're almost 30% for some of the companies. You can buy a driller that does exploration for the miners, and it might be less than 10 times earnings. You can buy a copper gold porphyry at 7, 8 times earnings. So as people are chasing other things, that's what I'm trying to focus on. I'm trying to focus on older school economy, and the reason for that, why it's working and why the world's changing, is financial repression. So what is financial repression? In my head, it's, events or the heavy hand of the government not allowing you to compound your capital fast enough. It might come through different forms. One of it that we're hearing again is yield curve control, quantitative easing, right? Outside of COVID, we haven't done quantitative easing in over 10 years. So the governments took a lot of debt during COVID. Now we have a problem. For some reason I don't understand, in Canada and the United States, we didn't finance our debt long-term enough. For some reason, rates were all-time lows, generational lows, probably lows we'll never see again in our lifetime, and we weren't financing 30 years. So now rates have gone up, and we have to pay more. And it's a problem because the central banks can cut rates, but what happens to the 10-year or the 5-year, where things are financed like cars, like homes, like boats? So yield curve control, quantitative easing, that's one aspect of financial repression. Another aspect of financial repression could be capital control. I don't want to be too out there, but you see what's happening in France right now. What if you have to keep your money in France into euros, buy bonds? In Canada, it might happen, right? We want to invest in our country. We want to protect our country. What if the big pension funds are told that you have to invest more in Canada? That's one kind of financial repression, right? Because in theory, you might be accepting a lower rate of return as a pensioner, but you're doing it for your country. I guess I'm old enough to remember when I started at Fidelity, the RSPs, you couldn't do 100% foreign, right? There were 30% limit. We spent the 90s in Canada when we had a lot of debt. We had debt issues. You couldn't invest more than 20% of your RSP outside of Canada, right? I'm not saying all these things are going to happen. I'm just offering possibilities. So I think the world is changing. I think it's a little bit crowded on the sound good stories. I think we're trying to retrain our analysts to tell them, no, we can't buy miners. No, we can't buy mining equipment companies. We've basically ignored these stocks for 10 years. I mean, we covered them, but we didn't go to any conferences for these companies. That's not where the action was. And now we're going back to these conferences. December, I'm going to a mining conference. January, I'm going to another mining conference and everything related. And it's so bizarre to revisit those companies. Sometimes it's the same people, so it's a little awkward. It's kind of sound familiar. I call it's like getting back with your ex. It's weird, it feels wrong, yet you're doing it. Feels a little dangerous. It's definitely awkward. Hey, I'm back. Haven't spoken to you in 10 years, to your old in-laws. But we're doing it, and the whole team is on it, and that I'm quite proud about it. There's a lot of experience on the Canadian team, from Andrew Marchese, our CEO, down. And a lot of us have lived through, when I joined Fidelity in 2002, in 2002 was a weird time because it was 3 years of negative US returns. But in 2005, gold moved, but in 2005, oil started moving. And then from 2005 to 2014, Fidelity Canada did a pretty good job investing in commodities. We didn't do as much as Dynamic, but we did more than most. And then in 2014, when, we were able to change and pivot. And I kind of feel the same energy. Hopefully we'll be right. It's been tougher this year, right? Because it's been a big change. So if you look at the Toronto and Montreal-based PM that invest into Canada, it's definitely been tougher this year for us because there's been a change in leadership. And we're changing that change in leadership because I think there's things happening there. So I want to conclude with this. I was having lunch with my dad 2 weeks ago. And he always wants to do lunch, and I always offer him 30 minutes, and he never wants to do that. So finally I had an opening, and we did lunch, and it was nice. And he asked me, he's like, what do you think about the stock market? It's really high. I reminded my dad, I'm an expert on stocks, not the stock market. But I told my dad, I don't know, but what I want you to remember is you cannot afford to get ahead. That's what financial repression is. You cannot compound your capital and less than inflation, and everything's getting more expensive. And it's been a problem for our pensioners that have been maybe too conservative. It's a problem for young people. And I reminded my dad, cash might feel really good for a short period of time. We're monitoring what's happened this week, right? There's been fraud in private credit in the United States. Like, we were really working on it yesterday. So, but generally, I think we have to keep our eye on the ball, is you cannot afford to not compound your capital. Not in this market. There's the heavy hand of the government. There's a lot of debt around the world. They're going to try to inflate their way out of it. They might put pressure on the yield curve to boost the economy. I think about my in-laws who are 86 and 80, and they've just been eaten by their purchasing power, right? It's been destroyed over the last 5 years. So I remain optimistic. Dare to say we have a new prime minister. Hopefully we can fight a little bit less between provinces. We have somebody that's more focused on economics. We don't speak to the prime minister. I don't speak to the prime minister, nor the cabinet, but we talk to people that do speak with him and them. The message is positive. And so I'm quite optimistic. And I think we're probably not talking enough that Canada's doing better. And Canada's beating the S&P 500. So will you join me on stage, please?
Hello, investors. We'll be back to the show in just a moment. I wanted to share that here at Fidelity, we value your opinion. Please take a few minutes to help us shape the future of FidelityConnects podcasts. Complete our listener survey by visiting fidelity.ca/survey, and you could win one of our branded tumblers. Periodic draws ending by March 30th, 2026. And don't forget to listen to Fidelity Connects, The Upside, and French Dialogue Fidelity podcasts, available on Apple, Spotify, YouTube, or wherever else you get your podcasts. Now back to today's show.
Thanks for having me on your show.
Oh, thank you. I know they give you half, they pay you half for my session, right? So you don't work as hard.
I haven't negotiated that yet. It was interesting to hear you say old economy and sort of back to basics, and it makes, is that beer?
I cannot.
Well,
yeah.
And,
it's right here.
Yeah, it's like, where's my... Can we start
no
again?
Alcohol in this, I should say. Yeah, it looks like beer. That's why I drink.
Let's stand up and walk back and sit down. Old economy. So it makes me think of in the late 90s we heard a lot about new economy, and it was tech, telecom, and healthcare. And anybody that was interested in rocks and trees and drillers and all the things you just mentioned, that was old school, and nobody wanted to talk about it anymore. And we know what ended up with happening with that. So it's refreshing to hear you talk about those sectors again. And it's Morningstar at the end of last year gave you some great accolades, and they said, you've done very, very well for many people because your contrarian approach, when it pays off, it's done extremely well for investors. So what you're talking about now, it takes patience, doesn't it?
Well, it certainly leads to different funds, right? So we'll see. I mean, I'm tired of being patient, frankly. I've been patient enough with those transport stocks, and I've owned them for 2.5 years, and that's one area that I like, and kind of unrelated or related a little bit to what I was saying. So 2.5 years ago, I started buying transportation stocks. US PMIs were negative, right? ISM PMI index. Normally, they stay negative for 18 months on average. It's been 3 years now. So it's the longest cycle. Our data goes back to 1947. It's been the longest data since we've been in a freight recession. It hasn't been like super deep, like 2008, but it's been just super long. And a lot of people in the industry, 30, 40-year veterans, say it's the worst cycle I've ever seen. So I'm attracted to that. So that's about 10% of Greater Canada. So that's where we're being patient. And it's been a real pain being patient. And I think it will work. I think those are good relative value. And we'll see. We might be getting a supply shock in trucking. I don't know if people are paying attention, but you saw what happened here with the accident in Florida and the enforcement of rules on English language and non-domicile. Yeah. So even though demand is weak, you might get a supply shock. Another area we're getting a supply shock is in copper, right? I talk a little bit about copper gold porphyries, right? So copper and gold tends to be together in geology. So some of these copper names are turning into gold names. I've been kind of interested in copper. I like mining. When mining gets tight, it gets really tight, but demand's been weak. And China is half of the global demand for copper. It's not doing super well, but then all of a sudden we're having issues with our mines. Right? We have four problems. Cobre Panama's closed in Panama. There was a seismic event in the Congo for Ivanhoe's mines, so they're underproducing. QB2, Tecominco, they're having issues, and unfortunately, we had a big event, a mud rush at Grasberg, which is Teck's biggest mine, one of the biggest copper mines in the world. 7 people lost their lives. Force majeure, force majeure. I do speak French, and mines close, and all of a sudden, copper's tighter. So, the world is shrinking. What I mean by that is there's less places to go. It just feels more dangerous. Even when we're doing mining, we're watching where the mines are. Canadian miners are not as welcome as they used to be, say, in Africa. Right? Some of them are more aligned with China. They've kept investing over 10 years there. Even in West Africa, some of the countries are more aligned with Russia. And it's creating issues for some of our miners. So we're watching where the assets are. So I don't remember what your question was, but I can keep going. But basically, there's some pockets that I own that there are supply shocks happening, and the world just feels a little bit different, and they're all related to kind of old world economy, and that's what I'm focused on.
I was asking about patience because you had said that I think you'd said transportation is something that you get frustrated with. Have you ever had that area that you've been focused on, and you get to the point where you say, I got to make a change, and then it ends up paying off, and you learn from that?
You feel like a complete, yeah, absolutely.
Well, no, but it's learning, right? The patience is tough because you have so much coming at you. Like we were talking about old economy, new economy, it makes people think that that's never going to come back, and inevitably it does.
Yeah, I think one of my, I think Mark once said that he wished he was more patient like Dan and I don't know if I think patience is my number one attribute. I think patience is my worst attribute also as a portfolio manager. So I'm trying to balance, so I got 10% in transport, but I'm also focused on miners and things like that where things are happening. So patience is important, but you need some stocks to be working. What I tell you, the big changes that we did is a lot of stocks that were working were expensive. I can't overemphasize that. We've seen our stocks go up and up and up, and multiples go up, and we knew it, right? We know they're too expensive. We know the 10-year compounded return from here is going to be tough, but they're working, so we're keeping them. I'm slowly selling, but we're keeping and keeping. And all of a sudden, over the last 2-3 months, poof, they stop working, and they're going down. And other things are working. So I think that's to me, that's a signal in the stock market that we need to make some changes.
In your latest top 10 that was disclosed, Westinghouse air brake technology is like 1 or 2. That's a play on transportation? Do they make for trucking or trains? What do they do?
They make the trains. One way to fight financial repression is to buy a business that has pricing power, right? Stock's been a little bit tougher lately because people are afraid about the rail mergers in the United States. If they go through, is that going to cut CapEx? But we really struggled to sell that stock because it's a really good business with pricing power. Then, U.S. might be a little tougher, but they're getting big orders from other areas in the world, where there's more than North America in the world. There's Africa, there's Kazakhstan, there's all these places, and there's just not a lot of competition in locomotives.
What other contrarian areas are you looking at now?
Well, I talked about transport. I mean, I do think that some of these mining stocks, maybe they don't feel contrarian because they've gone up a lot lately, but they're coming back to Canada, right? I don't know. Did you hear a lot about that the last day and a half? It feels to me a lot of people are in the same stocks. And I think there's other things happening and we want to focus on it. So that would definitely be part of it. Yeah.
From an activity standpoint, when you think back to the spring, Liberation Day, was that an exciting day for you?
Yes, in a way. So we did have one contrarian moment this year. It lasted about 4 days, right? Liberation Day. And that was good. We're very active. And I think that's where I'm at my best, frankly. S&P is down 20%. There's a bunch of cheap stocks. So a lot of stocks are down. If the S&P is down 20, a bunch of stocks are down 30, 40. And we were really active. I'll give you 2 examples that were disclosed at the end of June 30th. And these are not recommendations for these stocks today. But it was disclosed that I bought these stocks. In Greater Canada, I bought Shopify. We like Shopify at $70 US. I think it must have been there 3 minutes. But we bought a lot of Shopify between $70 and $75, and then it doubled. In Canadian opportunities, I bought Aritzia. Vietnam tariffs, really, really tough. Stocks down 20% that day. Most volume there's been since COVID. Stocks down from 70 to 40. We like it. We like their U.S. strategy. So those were examples that I did that day. And I'm very lucky when these events happen. To me, there's 3 things that help me in those moments. So Napoleon had a quote which was activité, activité, vitesse. So basically, you're working all the time. And Michael spoke about it a little bit earlier. You work all the time, so then when something happens, you're ready, right? It's not like I'm opening the Aritzia Now report and oh, what did they do, right? You've done a lot of work ahead of time, and you're ready. You're ready to, encircle your enemies and skate to the puck, whatever analogy you want to use before the competition, but you're ready. 2, it's a mental mindset, not to be scared. A lot of people get scared in those moments. That's one thing I'm good at. And the other thing I'm really lucky is, I have a partner that, I think I'm pretty involved with the kids. I try to attend everything. I cook dinners. Now, daddy dinner on during weekdays might be Uber Eats, but, I do cook on weekends. I'm quite involved. But when those moments happen, I'm very lucky. I tell my wife, I'm out.
Okay.
I'm just, I need to work. And she's a very patient woman. I told her yesterday that there's Andrew Pastor, Edgepoint, good guy, right? Good track record. He texted me yesterday, I'm coming to Montreal. We should have dinner on Monday. Perfect. I made a reservation. Then I told my wife, she reminded me it was our wedding anniversary. So I told her, well, if Andrew canceled, you can come. So she's very patient. And then in those contrarian moments, I ask her to free up my schedule, and she does. And yeah.
What were you saying earlier about dating an ex-girlfriend?
That we don't discuss.
The Napoleon quote, which I won't repeat, about being ready. How does, and Dan talked about big blocks that he would buy. How does Fidelity's economy of scale? So you've got ideas of what you want to do and execute on, and then Fidelity's able to get that done for you fairly quickly, I would imagine. How does that economy of scale impress you and help you?
We're lucky that we don't do the trading, right? So when things happen, we have traders.
You have traders,
and they show liquidity to us, right? So in moments of panic, there's offering hitting Fidelity, and I think Dan and I like in those moments we're a little bit in different waters, but being a supplier of liquidity, right? When people are forced sellers, when people have to sell, being able to buy in those opportunities.
Steve Dufour was up here at the beginning of yesterday, and he talked about the number of holdings he has, and he said it's because of the size of his monitor and what he could see. There's probably some truth to that. You have 87 stocks or thereabouts in your portfolio. Is that by design, or is that just the way it is today?
My monitor's a little bit bigger, wider than Steve, I guess. No, look, I try to do 50 to 100. In climate, I can get to 50. In the other funds, it's tough. For me, what's more interesting is your top 20 concentrated, right? So that I try to do. The rest, Fidelity, there's people that have run great portfolios with 30 stocks to people that run great portfolios with 800 stocks. I don't think there's a lot of signaling in there. For me, I try to do 50 to 100. Sometimes, I do need to own key content, right? So sometimes that you got to spread the love a little bit. But, and look, the name count's going to go up if we're doing more commodities, right? That's actually an important point to make. Like, there's nothing worse than having a thesis. Oh, I like copper. And you buy one copper stock, and it's like the one stock that something bad happens. It's the absolute worst. So, especially if we're going to do a little bit more commodities, if we're going to invest a little bit more in Canada, the name count's going to go up a little bit.
When you were an analyst, what was your favorite sector?
As an analyst?
Yeah.
Well,
you covered, I'm sure, many.
Well, my least favorite sector was gold. That's for sure. Dan and Max almost died visiting a gold mine in South Africa. They were going down the shaft in a Jeep, and they ran out of brakes. So they had to slam the Jeep into the sidewall to not crash at the bottom of the shaft. So I only visited one gold mine after that. And I don't know. At Fidelity, as an analyst, you want to make people money, and I was lucky to cover Research in Motion when it was a good stock, and Fidelity was the number 2 shareholder. The stock went up 30-fold, and I still think to this day, Will Danoff only remembers me because of Research in Motion, and that's okay. You have to make money for people. What Will said yesterday, I don't know if you caught it, but that might have changed my career at Fidelity. When he said yesterday, a stock went from 15 to 30, and the analyst saw, I missed it, but if it's going to 300, you haven't missed it. I cannot overstate how much that changed my career at Fidelity. So, give me 30 seconds to explain the story. We'll always talk to the team twice a year, January and July. And I'm struggling. I got to sell on Research in Motion. The stock's multiplied by 3. We're like summer of 03. And Will said basically this exact quote. It's not because it's gone way up that you've missed it. And I booked a trip to Waterloo the next week. And I went to see RIM, and I saw that the world was changed. And I came back, I upgraded it. We bought a fair bit of it. And I think it really helped me. And that's one of the great things of Fidelity that propelled my career. And then as a portfolio manager, I was able to do that with Constellation Software. Went public at $17. I was trying to buy it at 32. It was 35. Ended up buying at 90, thinking, I bought $90 million at 90 in 2012. And, it's $4,000. And it kind of helped me in my career as a portfolio manager. And that excludes all the dividends and the spins and everything else. So I think it's important to have a couple of those in your career at Fidelity. And I was just glad that Will talked about that, because I think that's one thing Fidelity's good at.
Who else did you learn from at Fidelity? Who else was inspiring to you?
I was really struggling 10 years ago, I think, on Valiant. And I went to see Joel Tillinghast in his office, and in 40 seconds, he was able to explain to me why he also thought that the stock made no sense. And he was comparing adjusted earnings to free cash flow. And I won't use the terms he used because, but he was looking at the earnings like, look, they're amazing. And look at the cash flow, it sucks. And within 6 months, it was done. And it was the biggest stock in Canada. And it was amazing that he was able to pinpoint very easily what to look at. And there's something, I had a gut feeling that something was wrong. And he was able to just express it, financially very quickly. So, yeah.
How do you decide when you see a stock that that you're very interested in? How do you pick your least favorite that's within your portfolio if you want to make a change?
Relative strength, stock that you've been holding on and you don't have a lot of upside anymore.
Right.
The market's not giving you a warm and fuzzy feeling. Stock's not working. Can be many different things.
How would you know that you don't have a lot of upside anymore, since Will taught you that you should hang on?
Well, to be frank, a lot of these stocks that we still hold, that I still held, that were 40 times earnings, that compounded over 5 or 10 years is going to be tough to make a lot of money, but you don't know where it's going to end, so you keep them a little bit, and when you have a better idea, then you can sell it. We got to train a little bit young people that's not the only game in town. There's other things happening. So, and we're really trying hard to do that now. Okay, I know you like your 50 times earnings stocks, but I think there's other things we need to focus on, and we're trying to do that.
You have a very small amount in the UK in your Greater Canada fund, so it just shows for a portion of the fund you can go wherever you want. How do you get those international names? How does that come across your desk?
I'm putting all of my 3 funds into a mining lens, and the price of gold has gone up so much, it's creating a wall of cash flow to the miners, and they're saying they're going to have financial discipline and they're going to pay dividends and do whatever. And I don't believe them. I believe that miners, they like to buy trucks, they like to buy shovels, and they like to dig holes. And that's why, and it's all different in the funds, right? So in ops, I have to do a lot of mining stocks because that's what's in the benchmark. In Greater Canada, I have a little bit more flexibility, but the fund's also larger, so I'm buying more like mining equipment companies. We are technically better companies. They're a little bit more expensive, but they tend to have pricing power. We haven't had a mining CapEx cycle in 10 years. In climate leadership, the fund is smaller. I can buy more connected industries like companies that do exploration drilling, remote camps, right? There's these businesses, right? We haven't thought about these stocks for like 10 years. And, remote camp, they're like cabins that they rent for the workers. So when you think about Canadian Arctic defense and these projects that we're going to build. And by the way, I think we're going to build more of these projects, right? If you look at what the U.S. administration is doing by taking position in some of these projects, right? They've done it for Lithium America. They did it for one of the Alaskan projects. You see what we're doing in Canada, right? We're calling a few projects, national interests, whatever terms we're using. And I think there's a high probability that these things would be built, and we're trying to get ahead of that and positioning the funds for these.
Question came in about old economy, mining, metal, etc. How do you anticipate regulatory headwinds or tailwinds?
Yeah, that's a good question. I think I just a little bit answered regulatory headwinds. I think in Canada, it's a little bit different between the provinces, but I think there's a focus in the federal government, both sides of the border. This is national security. The world is shrinking. Look what's happening with rare earths. We need these materials, and we're going to build them. And we're going to find some ways, just like in Canada, we might change some laws. So I think, that's kind of addressing one of the headwinds historically. I think the big thing, too, is where is the deposit, right? And Barrick took I think a $1 billion impairment charge because in Mali, they came with the army and they took the mine away. And my understanding, there was 3 tons of gold there and they just took it. So, I think we also, when we're looking at the world, where are the assets? I think it's okay. Like in Canadian Ops, I own a couple of companies that have African assets, but they're pivoting to Canada, and the future is there. So I think that makes sense. So that's how I deal with it.
Are there other areas of the economy that you want to share with us?
No, I mean, I could talk about AI, but I don't know if you want my opinion. So yeah.
Actually, we want your opinion on AI as a contrarian investor.
Look, I missed it. Basically, I had a few winners in 23, but I mostly missed it, and I apologize for that. The Cosmos was sending me signals, and I wasn't paying enough attention. I guess my view was a little bit tarnished by. So I joined Fidelity in 2002, and I saw the tail end of 99, what happened on the other side of it. And it was not pretty. So at this point, I think the circular reference that's happening between the financing is not a great sign. And I do enjoy my Gemini when I do a Google search, but I think it's not ready for prime time and enterprise. And there's a FOMO aspect to it, the fear of missing out, of creating a digital god that's got to suck this profit pool out of every company. So that will last, for a while. But I think on the other side of it, there's not a lot of recurring revenue. And I'm just interested in other sectors, frankly.
So I don't understand, as a contrarian investor, you said you apologized for missing AI, but aren't you more of a complement to it? Like, I wouldn't expect you to become
no, but people trust you with their capital. I mean, I only own my funds, right? Like, I don't do PA stocks. I can't remember last time I bought a stock, outside of Fidelity. All my money's in my 3 funds. I want to compound capital, right? I wish I would have owned some NVIDIA. So, no, absolutely not. I think I failed there, and I can't go back and turn the clock back, but have to move forward from here. But I think from this point on, I think there's other things happening in the stock market that we're not talking enough about. And, so I'm putting myself out there a little bit. We talked about Canada, we talked about mining, and, we'll see what happens.
Okay, so given that, where do you fit within a portfolio?
Contreras is his own thing. And, I thank people for their patience. We did a French breakfast this morning. Clients were asking, what do we tell our clients? And well, what did you tell them when you sell the funds? So I think, I'm working super hard. I'm 46 years old. It's not like I'm not working, and I work 6 days a week. I mean, I don't want to oversell this, but I work 4 days, I work till 10 or 11, 4 days a week. I work on Sundays. I want to do well. I want to keep compounding my capital. And that's why Global Equity Plus, right, Glenn? It's been so good because, I'm sucking wind. Mark's doing amazing. And at some point, hopefully things will be different. We want to keep clients in the game. It's the most important thing. Keep clients invested. Financial repression, compound your capital. And I think that's why Global Equity Plus has been such a success for us. So I guess that's a third of that. So maybe I should be a third of portfolios because that's been a big success for us. And I'm happy that it's selling well because to me, that fund has great retention and it's important. It's important to keep the people in the game. We are our worst enemies financially. When Liberation Day happened, for 2 weeks, our number one seller at Fidelity Canada was our cash fund. Right, so the market's down 20%. We're selling short-term bonds. That's what people want to buy. So you have to, look in the mirror and say we're not very good at picking, our spots. We want to pick something that we believe in and stay invested.
Awesome, and thank you for your hard work. Because we have a minute and a half left, I'm going to ask you one fun fact about you, and that is, what's your favorite holiday or celebratory time? Okay,
so there's quite nothing like Christmas morning, but in my family, so give me a minute. I'm known for Halloween, and probably like it a little bit too much. I have these animatrix like everybody else. My wife hates them because they're in the garage for 364 days. They come out in the sun for about 24 hours. But the big deal, the one thing I'm known for is, and I've copied this, we trick-or-treated once with my family in Arizona, and the house blew me away. So I have a farmer friend. He has a white van with a sliding door, and we turn into like an abduction van. So we write like free candy with a reverse Y, or in French, bonbon gratuit with reverse S. We wear overalls, and we wear like scary clown masks. And we ask kids if they want to come and pet the puppies, or who wants to get in the van, get some candy. And we're not crazy. We leave it parked on my house. We don't drive it around. We're not, we're intense, but we're not maniacs. But the reward is you get full-size chocolate bars. And I buy a couple of these Costco chip bags are like $8. So if you have a cute unicorn, somebody's 3 years old, you give them the bag. The bag's bigger than them. My daughter, who's 14, she tends to be in the van. There's bed sheets, there's blood. It's pretty cool. I really like it. I like it a little bit too much, considering it lasts like 3 hours. But yeah, Halloween at my house is fun.
I hope you have good liability insurance, and good luck getting back across the border. Hugo Lavallée, everybody.
Thank you.
Thanks for watching or listening to the Fidelity Connects podcast. Now, if you haven't done so already, please subscribe to Fidelity Connects on your podcast platform of choice. And if you like what you're hearing, please leave a review or a 5-star rating. Fidelity mutual funds and ETFs are available by working with a financial advisor or through an online brokerage account. Visit fidelity.ca/howtobuy for more information. While on fidelity.ca, you can also find more information on future live webcasts. And don't forget to follow Fidelity Canada on YouTube, LinkedIn, and Instagram. We'll end today's show with a short disclaimer. The views and opinions expressed on this podcast are those of the participants and do not necessarily reflect those of Fidelity Investments Canada ULC or its affiliates. This podcast is for informational purposes only and should not be construed as investment, tax, or legal advice. It is not an offer to sell or buy, or an endorsement, recommendation, or sponsorship of any entity or securities cited. Read a fund's prospectus before investing. Funds are not guaranteed. Their values change frequently, and past performance may not be repeated. Fees, expenses, and commissions are all associated with fund investments. Thanks again. We'll see you next time.